Hi, welcome to the Market Alert for Monday, the 20th of September 2021. So stocks stumble for second straight week amid debt ceiling doubts, FOMC fears, and Gamma unclench. Republican intransigence over the increasing debt limit and the Democratic overconfidence that they will be able to pressure Republicans into doing so, creating unusually high risk. So this is the headline from Friday. Here's another one as well. Powell owned at least 1.5 million in municipal bonds, like the ones the Fed bailed out in 2020. Well, what a surprise, eh? No point in reading the subhead on that. Evergrande is back in the news as well, as Hong Kong stocks crash overnight. Future sliders market finally freak out about Evergrande default contagion. Markets have their Lehman-y Brothers-ly feel to them at the moment. And former Lehman trader on China's Lehman moment. Today's players on the field make Dick Fuld, who was the former Lehman CEO, look like a choir boy walking out of Sunday Mass. The coming event will dwarf what was a colossal failure of common sense. Yeah, as I've said for weeks, there's something big coming down the line. It's as if it's been held. And here's another one for you. This is about electricity and gas prices. I think I touched on this. I did last week, about natural gas prices increasing, and this is from my supplier, Octopus Energy. Wholesale energy costs have risen 212%. Well, this is sent Downing Street into a bit of a spin because all of the headlines from the weekend: mounting fears of a 1970s style 3-day week as Britain's energy crunch deepens, rocketing power prices and gas storage crisis threaten the recovery and leave the UK at the mercy of Russian Vladimir Putin. Another dig at either China or Russia. UK Energy Group asked for state bad bank to weather crisis. Yesterday, emergency meeting was held in Downing Street with regards to this, and you can see the narrative here all about this. The meeting was held, and they're actually government's going to print more money to bail out the smaller gas and electricity providers, from what we can see at the moment. And, like Abe Jacobson says, don't believe anything till it's officially denied. I want to give a general reassurance that the problems we're seeing are temporary, Johnson said. Yeah, right. Like inflation, which continues to move to the upside. And the Daily Mail with this article here from an expert. I don't know who the expert is. Always wary, I should say. Yeah, but they did become weary as well. Household bills will soar by more than $1,500 a year, with families on the cusp of the biggest spending squeeze in nearly a decade, experts warn. It is the perfect storm, there's no doubts about that. They need inflation to inflate out of the debt, and as we see here, we've got a 3.2% increase in inflation. We know it's BS because inflation is trading around 17%, according to John Williams from Shadow Stats in the US. He's kept the figures from 1980 using the old criteria to calculate it. We know this anyway, and you have to look at food prices, and of course that's on the cards as well. It's going to be one hell of a winter, that's for sure, if we carry on at this rate. Meanwhile, in implied volatility, this moving back to the upside on Friday, following the sell-off in stocks in the afternoon. We saw the Dow moving sharply to the downside, so again, still a lot of risk in the market, and again with the Evergrande situation as well looming in the background. In news for this week, we've got nothing for today and tomorrow, but then it really kicks off from Wednesday. We've got FOMC press conference, FOM statement, projections, etc. And on Thursday, we've got all of the flash in the morning till the afternoon when the US has theirs. But until then, we've got Bank of England. You can see it's huge amounts from Wednesday. Official bank rate from the UK, we've got that from the US on Wednesday. And then Friday, what have we got? Thursday, Friday, we've got Fed Chair Powell is going to be speaking on Friday, excuse me, along with Williams as well. So let's have a look at the Dow for Friday. And you can see here that prices moving sharply to the downside. They attempted to move higher on Friday, as we can see. They're trying to get back above the 89% retracement and that 50, but failing to hold. And then overnight prices have already weakened and sold off with what's going on in Hong Kong there. So what I would be inclined to do here is have a look at where the next downside targets are likely to be. From here to here, that's where we're looking at, which will take you back to this low over here, of course, nearly 90% retracement. We've already come through these areas of support, so we'll get rid of those for the time being. And then the 30-minute chart, so you can see that the Dow just sold from the open. It was straight down, held, but overnight you can see the market's already dropped more than it did on the Friday cash session there. In the German DAX, let's have a look in the daily charts. Again, you can see also trading back up to the 50% retracement that was drawn in from here down to there and projected back to here. That failed, and also moving lower as well. So let's just remove everything and get an indication of where the market is going. So from this low to this high, we've got these two figures are really the important ones. So let's just keep those in mind there. And in the 30-minute chart of the DAX as well, you can see huge selling within the first 30 minutes, and then it just followed the Dow to the downside. In the 2-minute charts, we saw the market moving up initially and then retracing before moving lower, and it just had no desire to move to the upside whatsoever. And if you look here, we just take out this here. If we go from here back to here, you will see that this already defined that this buy side wasn't going to work, because we came back down to here, projected back, stopped bang on 89%, and then moved lower and then stayed below the 20 bar moving average. And as we went through the morning, the market starting to sell off quite strongly, with all of the averages lined up when we opened in the afternoon. Got the 200, the 20 and the 5 all in the right order, 5 below the 20, 20 below the 200, and moving sharply to the downside there, just following the Dow until we saw some buying coming back into the market here, which is blatant. You can see them getting out of the short side trade there at 16.30, just as the cash market closed in Germany. And then finally in the metals, we had another down day on Friday. Well, what a surprise. No surprises there. We've broken the support to the left, which is likely to have happened. As we said, I'm still got orders in to buy at $20. We've got another $2 to go down yet, and I wouldn't be surprised if we don't use that. The market's up on the overnight, which is surprising, because I've had a bit of a sell-off here, and they've bought back into it already, which I'm surprised by. But 130 we'll see Morgan come in and do its stuff, and then hammer the price to the downside as they move the dollar to the upside. Here's Fridays. You can see, as I said, we started to see a bit of a bounce, and then again you can see that we've got a retracement here, and then we just went short. The market moving lower, and then overnight, so say we've already had another run down to the 22 level, but no worries about this. We'll end up going straight through this and down to $20 is going to be the bottom in this market. Dirt cheap, absolutely dirt cheap when it does do it, but we've got to put up with a few bounces in between. If you have a look at the 30-minute dollar, you can see that Thursday was moved sharply higher, Friday moved higher, and is trying to move higher now in the daily chart of the dollar as well. On this one, I'll be looking to see if there is going to be some weakness at 93.51 area there. Okay, that's it for this one. Nothing else to report at the moment. Let's just see how it pans out today. No news, so the market's going to have to make its own direction. But we'll see what happens there. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.